Hi everyone, welcome back to the channel. Today I want to talk about the top 5 dividend paying stocks. They're very important to have in your portfolio, as I mentioned earlier in other videos. So let's get into it. Let's talk about the top 5 paying stocks that are available at current valuations. So let's get into it. Firstly, we have Freehold Royalties. Freehold Royalties is exactly that, a royalty company that owns real estate and land on which large and mid-cap oil companies drill and extract oil and gas. They pay a percentage of their production to Freehold. Essentially, Freehold's capital expenditure is very low. It's a very safe way of investing in the oil and gas sector. Currently, they offer a 7.34% yield, which is paid out monthly. One additional note on Freehold: they own their land in Canada and in the United States, which is important just because of the different prices of oil that is considered in each of the two countries. Secondly, we have Scotiabank. Scotiabank is one of the top 6 banks in Canada. It's unique in that it has business in Latin America. So we're talking Mexico, Peru, Colombia, amongst others. This is also a cause for concern for investors because the return on investment in developing nations is not always profitable. The new CEO, Scott Thompson, has made some changes in management recently, and he has also promised to reduce the high-risk investments in Latin America. This gives shareholders some hope for possible upside in the share price going forward. At the time of recording, Scotiabank is offering a 6.7% yield, which is super high for a bank. Because the market has been down in the calendar year, Scotiabank, along with the other banks, their share prices have been down. So it's a great time to get into Scotiabank as they're offering a 6.7% yield. Third of the top 5 dividend paying stocks is the TD Bank. Now, the TD Bank has been in the doghouse this calendar year as far as the share price goes. The highly anticipated acquisition of First Horizons Bank in the U.S. fell through due to regulatory concerns because of the bank's anti-money laundering policy. The full details are not released, but a positive side effect of the deal falling through has been that that TD now has an excess amount of cash on its balance sheet. This high level of cash can be used to increase shareholder returns in the form of buybacks or increasing the quarterly dividend. Right now, TD is offering a 4.8% yield on the current share price. Second, lastly, we have the Royal Bank of Canada. The behemoth that is the Royal Bank is the most valuable company on the Toronto Stock Exchange by market capitalization. It has business components in Canada and in the United States. It's very profitable, very strong, very safe company to invest in, and currently it offers a dividend yield of 4.5%. If someone were to invest in the Royal Bank currently, right now, you have the possibility of increasing your share price, meaning possible upside going into the future, capital appreciation, or a dividend yield and dividend yield growth over the next many years to come. Finally, we have Enbridge, the number one stock that I feel is available for investors who are looking for passive income, who want that passive cash flow every 3 months. Enbridge is offering a yield of 7.8%. They just announced the acquisition of gas utilities assets from Dominion Energy. The share price has dropped, which has resulted in the bounce of the dividend yield percentage. Again, it's at 7.8%. The core business of this pipeline company is strong and stable, but the concern of high debt levels remains, especially in the high interest rate environment that we're in. Some analysts are also making statements that Enbridge is paying the dividend by taking out debt, which I don't think is completely true. I think they have enough cash flow after the servicing of the debts to pay the dividend, but that notion, that thinking, that narrative is still out there. Investing at current share price will allow capital appreciation because it is currently at 52-week lows, the price for Enbridge. And investing now will give you an 8% return on the investment. So there you have it, the top 5 dividend paying stocks currently, in my opinion. We have, again, to review the list. We have Freehold Royalties, a royalty company, very low capital expenditure. Scotiabank, with its business in Latin America, which they're trying to cut down on, sell those assets there. TD Bank, a lot of excess cash flow on the balance sheet can be used to make other purchases or increase the shareholder returns. We have the Royal Bank, which is the most valuable company on the TSX. I'm a big fan of the RBC, quality company. And then we have Enbridge as the number 1 dividend paying stock. Thank you guys. Please leave a comment and share the video. Thanks.